and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now today we've had a much busier day in terms of economic data. We've had starting overnight with the Chinese industrial production, urban investment and retail sales. Bit of a disappointment across the board here, all coming in short of expectations, and really just feeding into the rhetoric of a slowing Chinese economy, really heightening those concerns, I guess, that's been so prevalent for so long. But really, the response in the markets would potentially suggest otherwise, or suggest that the reaction has been not necessarily one of disappointment, but one of more expectation. The expectation in this case being around further monetary stimulus. There was even talk at stages, or speculation at stages, of quantitative easing from the People's Bank of China, although I don't think there's anything solidly backing this up. There's plenty more that the PBOC can do before having to resort to such unconventional measures as quantitative easing. They can still continue to cut interest rates, the reserve requirement ratio, amongst other things. So I do think this is a little way away at this stage, but these are the type of things that are being discussed, and I think it's this expectation of more QE, or of more monetary easing, which has helped to support the markets overnight. Chinese markets closing much higher, 1.6% higher on the Shanghai Composite, but markets throughout Asia are also finishing higher as well. So there was a much more positive sentiment coming into the European and US sessions today, but really where you haven't really seen that follow through, European markets once again are very mixed. US very marginally lower after all three indices, the S&P 500, the Dow and the Nasdaq, closed at record highs yesterday. Today they are trading marginally lower as we head into the weekend. But we have had, like I said, a lot of economic data out today. GDP figures from Germany, Italy, the Eurozone as a whole. And in terms of the figures themselves, the overall Euro area reading was completely in line with expectations, so there's no shock here. Italy falling short of expectations. Again, the economy continuing to suffer, partially driven by the ailing banking sector. The economy really struggling to get going given the size of the non-performing loans and the fact that the banks themselves aren't able to assist any form of economic recovery here. But then Germany did outperform expectations, so that helped support the GDP figure on the overall reading, but also I guess help maybe stabilise sentiment as well. And then we headed into the US session. We had plenty more data again. Not very good data though from the US, and this has again raised concerns about, well, not raised concerns necessarily, but pushed back expectations for the next interest rate hike. We had retail sales disappointing quite considerably, rather than 0.4% growth. We had flat growth in retail sales. Core retail sales also falling widely short of expectations, at minus 0.3% versus expectations of 0.2%. And then the PPI inflation reading as well was well short of expectations. So again, all this fed into easing expectations for monetary stimulus being pushed back. Once again, we did see some weakness in the dollar on the back of these, and that's now down around 0.25% as a result. Heading into this, we've also had consumer sentiment, should I say. The consumer very much in focus today in the US, and consumer sentiment, the University of Michigan Consumer Sentiment Index rose only to 90.4, again falling short of market expectations of 91.5, and again feeding into the rhetoric that the US just isn't ready for an interest rate hike as far as today's data is concerned. Of course, the Fed tends to take into consideration a broader selection of data, but things like consumer sentiment, retail sales are obviously some of the key indicators which they do follow. We do still have one piece of data to come from the US today. That's the Baker Hughes US oil rig count that has been rising as of late, which has helped to weigh on oil prices. Now, there's been a few factors contributing to the moves in oil price at the moment. We had oil falling quite considerably over the last month and a half or so, back towards a $40 a barrel level. As oil rigs continue to rise, US output continue to stabilise, and this whole oversupply side story, as we've talked about throughout this week, really coming back into focus. Since then, we heard from Saudi Arabia, who have suggested that a cut or a freeze between OPEC and non-OPEC members could be agreed in order to stabilise the oil market. There is a meeting, of course, on the sidelines of the Energy Forum in September between OPEC members, so that could garner something, although I am still sceptical at this stage that anything will actually come from this meeting. But it has helped to support prices. Saudi Arabia oil minister yesterday saying that cut or a freeze is very possible in order to support prices at these levels. But the oil rigs count is going to be the latest piece of data which could have an effect on oil prices. Oil today is actually a little bit higher, around 2/3 to 1% to 1% higher. I do actually have a couple of charts for you here. This is Brent crude. What's interesting about these charts is the fact that we have gone past the prior level resistance, which was around 45.50. We did initially see a pullback from these levels, but it wasn't the most convincing of pullbacks, and following these Saudi comments we did start to see Brent crude pushing higher again, and now it's reached that level which I think is very, very key here for Brent crude. We have it's a big prior level of support from throughout the June period. It's also got that the top of the descending channel providing additional resistance here. It's the 50% retracement of the entire move lower from early June through till the end of July. It's the 61.8% retracement of the most recent swing high to swing lows, and also we have the 55 and 89 SMAs, day SMAs coming into play around these levels. So it is a very significant level around these 46.50s. Initially it has failed to break above these levels. Now we could continue to see pressure to the upside if we continue to hear more comments of the sorts that we've had from the Saudis, but I do think it's going to take something quite substantial for Brent crude to break through these levels. You can see on the 4-hour chart we had that bearish engulfing pattern, because we've also got the 200 and 233 simple moving averages on the 4-hour chart providing resistance. It was the 233 itself which actually provided strong resistance here earlier on today. We have seen it start to move higher, but until that the highs of earlier on today are broken, I think this is starting to look bearish as far as I'm concerned. These bearish engulfing patterns are can be quite a decent signal until the highs are broken. I personally remain quite bearish here, especially given the number of significant resistance levels that we have at this point. I do think it's going to take a very significant move to push beyond these, but we'll see how it goes. We'll see how we end the day. If we end the day above here and we end the day back around the $47 a barrel levels, then potentially that suggests we are going to see quite a strong continued push to the upside. Aside from that, that's been all for today. It's been a very quiet week in the whole, but the final day of the trading week has been far more active. Hopefully, I imagine the weeks to come will pick up a little bit from what we've had this week. It has been, like I say, a relatively quiet week in terms of economic data and overall general news flow, but I do think oil is going to continue to be a dominant theme. I hope everyone has a great weekend. I'll see you again on Monday. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.